we have a mixed market here today. And as we look, we have red, green, everything mixed up, and it's still in consolidation. So as we look at the price on super short term, this is an hourly chart to see what's really happening right now, because everyone is getting bored because we don't have a lot of price action. So in this one, this is a symmetrical triangle. You're getting higher lows each time and then lower highs. So that's a symmetrical triangle, which we can see right now. Usually symmetrical triangles break to the direction of the impulse, and here for us the direction of impulse is to the downside. Now that's not something to panic, because when we take a step back, move into the 2-hour chart, yes, you still have the same pattern, but look at the RSI. It's showing you there is a difference. Yes, you do agree that you are creating higher lows each time when you are moving to the upside, and right now you're getting a bounce. Then you look at these tops. What can you observe here? When you look at these tops, it's like, okay, this was a previous high, but right now we have already came to that one, tested that, and then went back. So if you are looking at the price, you're going to get a different idea here. Say you reached 1.01 there, but next time when you came back up, you came to 0.97. So you did not test the top. So on the side of buying, the strength is increasing. So the underlying strength from the buyers is increasing. And as we look at the MACD, the trend evolving in MACD, yes, it's moving to the upside. And it's also showing you that there are potential that we may break to the upside. How can we say that? We just try to connect this and we see a ascending triangle where chances are that we are going to break to the upside. So now we get that same idea here in the RSI and the MACD, and the price is showing you a symmetrical triangle. Now these are the areas where you have to understand the price and the indicators to think, okay, what's going to happen next? What are the odds? It's not sure, but you're looking for what has the higher odds. Now we take a step back, we move in to 4-hour chart to see, okay, whether what we just analyzed now is valid. So you can just extend that line and see whether that was a support resistance zone before. Now, yes, it has been a support resistance zone prior to this. So now we can say that, okay, that's valid. Great. Now, what are the other steps which you really need to observe? Because there are patterns evolving in different assets. It's not only in XRP, but if you look at this is an altcoin market cap chart which shows you, okay, there is a potential that it's going to break to the upside. Then the entire macro structure of the same is actually showing you this. So chances are you're getting a cup and handle where it's a bullish pattern, it's a reaccumulation pattern. Previously when we had that, we broke to the upside in the direction of the momentum. So we'll have to reanalyze that, we'll go through that. Then to understand the altcoin market and the movement, you can look at the Ethereum. What are we doing? We have something similar. We had first base support here around 1850 or 1850, and then right now we are getting supported by close to 3000, 2800, 3000, that range. The pattern shows you like we are in a bullish flag, which itself is a bullish pattern. Now it's about the Bitcoin. What do you actually see in Bitcoin? See, understanding the pattern is really important to understand the odds. We have created a lower high here compared to what we had previously. I agree on that point. But what I'm looking at right now is the support resistance zone. And as I look at the supports, I'm like, okay, fine. We had a support here at 30,000. We bounced. We had another level of support here near 37,000 towards 42,000, and we bounced. So that is horizontal support level. And at the same time, you look at the pattern, it shows you like, okay, that's a falling wedge. And chances are higher that falling wedges break to the upside. So Bitcoin on a macro shows you this can happen soon. Now it doesn't have too much of an upside, but yeah, from 42, if you're going to retest that $60,000 mark, that's still huge. Now take a step back and look at Bitcoin dominance. So at first you're going to come here towards that 46-47% of dominance. Then if we break higher, we are going to look at like 53%. So that's not bad. But understand, when money is coming back into the market and Bitcoin is running high, alts may slow down, but some of the alts are going to follow that. And then when people reach this area of 60,000, they are going to be profit takers. because they don't know what's next. And those who take profit are going to reallocate that into altcoins. And that's when we see these kind of stuff breaking higher. Now, even though this is a 4-hour chart of XRP, which is showing us a bullish pattern, we do have to, look at that, the macro scenario as well. Because in the macro, you see this kind of stuff. Okay, you are literally having your support line staying valid for a long time. And then we look at like, okay, fine, we do have a long-term trend line. And then we do have a horizontal support, which we are holding as of now. So if we take a long wick like this towards this moving average, the green line, and then the black line, which is the trend line, and then go back up, don't be surprised. Because the RSI shows you still have a little bit of room to the downside, but you're slowing down. So the momentum to the downside is reducing, but you still have a little bit of downside here in the RSI and here in the price. So that can be a little bit of red flag for those who are trading in short term with leverage, because that really can hurt you. So now, when we come back to the real-time chart of XRP and move into these, say daily chart shows you like the MACD has tried several times to cross back up. So first it was here, it was rejected. Then again we went closer, we got rejected. Now it's like the third time. So if you go back in history to see, okay, what was happening, like the first try we got rejected, second try we got rejected, third time we broke higher. Okay, that means we have a chance that we may cross to the upside. Now again, you go back in history to see like what really happens every time. Take the opposite scenario. We were kind of looking to cross to the downside. First we got rejected, second we got rejected, third time we got rejected, fourth time we crossed to the downside, and then immediately went back up. So in a bull market, you're not looking for bearish crosses, you're looking for a bullish cross. In a bear market, you're looking for bearish crosses to come towards trading, right? Now, your direction is bullish, so you were waiting here and you got the cross here. So if it's a trader, you would be entering here and exiting here with that level of difference. Now, again, you tried first time, failed, second time, failed, and third time you crossed. So these are something which you need to understand as you monitor the price and analyze it with different indicators, because history gives you an idea of what happened previously with this particular asset at different price levels. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. Now we have repeated patterns happening here in the crypto, and that do matters, because when we have patterns like this, we do have to understand these kind of patterns does play out well. So if it's a bullish market, say we do have a bull market right now. So in a bull market, when we observe things like, say for example, bullish flag like this, we have the momentum to the upside, then we come inside a short range which looks like this. So within this range, when we are getting this, we are looking for a break to the upside. So next one is this one, which we are getting right now. Say in Bitcoin, we are getting this particular pattern showing the momentum was to the upside. Fine, now you are correcting back. Now the correction itself is bullish correction day. So now if you are looking at this, next one can be a symmetrical one, which we just saw on an hourly chart in XRP. Now this can break to the downside or to the upside, we don't know. So if you're trading short term in this asset, you're literally looking at like where it's breaking to the downside or if it's breaking to the upside. Now if it's breaking to the upside, which chances are high because the momentum is to the upside, the impulse is to the upside, you have to keep that in mind. Now these are not only the patterns which play inside a bull market. You do tend to see, rather than getting this bull flag here which tends like this, you usually get in crypto, you usually get something like this, which looks a little bit messy, but if you look closer, you definitely will understand like that is a rounded bottom happening on a shorter time frame. Now within that rounded bottom, at first you may actually get this kind of a structure which shows you this. You're going like this, then you break higher, but you come back to retest that broken level, and then you go back up. So now when you connect this, you get a rounded bottom there too. So this can be a mixed up item, but don't get confused, because understand, once this breaks, it should go back and retest this range. Now if you are new to the crypto market or any trading type of event, understand if this is your resistance for the time being, and this is your support, and you're trading, don't just keep your stop loss just below the recent support. Say if the price was being supported here and then it eventually went up and came back down, you're buying say somewhere close to here, keeping your stop loss here. Understand this, it can wick lower and then go back up. So you're kicked out of the market. So go to ATR, average true range of this particular asset on that particular time frame. Each time frame will have different volatility. Say on a daily, if you're trading, look at the daily average true range and put that one below this. That would be kind of safe. Now understand, crypto is so volatile, it can even go through this one before it continues higher. But the chances of this happening is now like 50% reduced by using this technique. So now again, back to the stuff. If you are in this, looking at the support resistance zone, you need to understand the basics. Say this is resistance, this is support, and your price was like, okay, this was moving higher, it came back, it got supported here, then it started moving up, you hit a resistance. Now what are you really waiting for? Even if it's consolidating there with a bullish flag and then breaking to the upside, what you really want is a retest and then pump to the upside. So if you are a breakout trader, you enter here at the breakout. Great, that's okay, that's fine. But once you enter there, you do have to understand there is going to be a retest and then a bounce to the upside. So you don't have to be emotionally unstable when this happens, because that's expected in the market. Otherwise, you're trying to get into this retest, buy that retest. But the problem with buying into a retest is that we may not always break this and come back to this area. Most of the time, or say 50% chances are like, say you have this resistance, you broke above, but you continue higher and then come back like this and then go higher. So you miss this price, that range of price. Say this is $1 and this is $1.2. So you kind of literally miss 0.2 there. Whereas if you're buying the breakout, you can buy at 1.05. Then the risk involved there is like, okay, what if you break higher and then come back in? We see a lot of fake outs too. So that has to be considered when you are trading. Now, you have different trend lines like this. So when you have trend line, you do understand that assets are moving within a trend. Now, in this trend line, don't buy when the price is above the median. I see people asking me, can I buy? It's here. Say if I'm taking you to the charts for that particular example, say it would be like, I think now if I'm not wrong, I think it's Cardano, which is looking something like that. It's okay for those who have already bought in. Yes, it is. It's okay for those who are already in that cycle because it seems like it's going to go higher. It's fine. But for those who are going to enter here, what if it's getting rejected? We don't know. We are not sure about that because that has already went up so much. So if you are a holder who has already been buying this asset somewhere here or somewhere with this breakout, say 0.2 towards 0.3, 0.35, that range, it's okay. You can still hold. You are like 8 to 10x already up, and with patience, you're going to make it. Your ROI is going to be higher. If you are not a trader in this asset, or if you were not able to get onto an asset like that, I would prefer buying something like this. You go look at an asset which has reached the support. So this is XLM on that time frame. So what we are trying to say here is, if you find an asset here, buying into this range would be the best thing to do. Now, the problem with that is, again, everything has the downside. You get here, you get the best price, but you definitely have to wait through this consolidation. If you don't have that patience, if you don't have that mental stability, it's going to be hard. Even though you understand that the price is going to go up here, you may not have the time to wait till that happens. Now it depends. You're seeing this pattern on a daily, you're seeing this pattern on a weekly or a 4-hour. If it's a 4-hour, great. It's going to get completed mostly in a couple of weeks, max towards 2 months. But if it's on a daily, you may actually have to wait 2 to 3 months. If it's on a weekly, you may actually have to wait like 5, 6, 7 months. Who knows? But it's going to definitely show you that it's going to do this. Now, as an example, say I would show like different assets. But if you are looking at just this one, which I've shown you, you follow this idea clearly. Okay, we have done this, we went up, we are doing this fine, we are inside this pattern. What's next? So when you are coming to the downside here, as we just highlighted, you had to buy in there, and those who bought, even those who bought in at that level, literally had to wait like 3 months for it to go up. So buying in low means coming in early, and coming in early means you have to wait a lot. And this is a daily chart where you're observing this trend. Now we move on to a monthly chart to get more clarity about what's happening right now. And you seem like, okay, fine, on a monthly we are still near the support, and your intended take profit is something like $2, $3, $4. It's going higher, and that's like, it's going to give, the market is going to give you like 10x, 8x, 12x, on average say 10 to 12x. Great, but what's the time taken for you to wait? It can be like 140 days, it can be like 230 days. So if you don't have such a time frame, you shouldn't be such an investor. You should be a trader if you don't have time. And then if you're a trader and if you don't have patience, or if you don't understand the market, it's gonna hurt you in many different ways. So when you're putting your money in, you do have to understand there's a lot of risk involved in trading, and especially crypto market, because it's so volatile. You get just a little bit of news and the price goes up and down in very short term. So we have seen this recently. If you go to a 3-day chart here, what you would be looking at is like, we often do get volatility. Now if that's gonna kick you out emotionally, don't be in this, don't trade like that. Try to find time, because timing the market is really hard. And if you have time in the market, you may not just see red numbers, but you will also see deep red numbers. You go through that. Then with this, as we talked, this time you are in deep red. You're buying here to average down, and if you're a new buyer for that asset, you didn't buy all this time and you waited till here, great. Now if you wait for some time, you're going to see something like this. It's moving higher. You're going to see something like this. It's going to move higher. But always do understand, when you come to the return rates of many different assets, you also do have to understand, like, okay, these assets have done enormously well, right? So here, if you're looking at Luna, last quarter it has done 5x, and if you're looking at the entire year, it has already done 120x. Fine. So if you jump onto that particular asset, which is Luna, just to give you guys an example, if you are entering into any type of market, you do have to understand there are short-term patterns, there are long-term patterns, there are macro scenario which you need to understand before you jump in on any short-term trades. So if you are definitely doing this trade in the market, you do have to understand there is going to be risk involved, and the level of risk involved can be at different levels. So first you are looking at the support resistance zone, where it's being supported, where it's bouncing. Then you're looking at the strength. So here in the strength level of the price, it's moving to the upside, but in the RSI you're getting this to the downside. Now that shows, okay, that's just mixed signal, because the MACD is not agreeing with RSI, it's agreeing with the price. So now that side, the upside, gets more support, right? Now when you're trading any asset for this matter, you do have to understand that. That's why when we talk about XRP USD, we are like, okay, fine, we do have this trend line, we understand this, but right now we have the XRP RSI and the MACD showing you that, okay, they are agreeing on this particular trend, they are inside this, they have to break out. So until then, the price is kind of on hold, because with the current SEC issues going on, now that's a lot of positive news coming out. I agree on that one, but the problem is, when you have a ton of positive news coming out, it's like, okay, if the media is putting this much positive news to the retail investors, you need to double think, because maybe there is a little bit of drop coming in from 0.9. What if we drop to 0.8 again? For us long-term investors, that's just noise, we don't care. But those who have leveraged positions and stop losses trading, or trading stop loss near that, it's gonna hurt them. So it's always important to understand what we see. Say for example, here there is a possibility that it's looking like this, you broke to the downside if it's a falling wedge. But if you're looking at a bullish channel, no, it's like a bull flag. Within that channel, you have this pole, you are doing this channel, and the impulse is to the upside. So you have to keep those in mind. If you are trading short term, this can impact you a lot. So you do have to understand which pattern has the higher odds. Otherwise, the market may kick you out, right? So guys, if you received value for your time spent here in the Scientific Investor channel, please do hit that like and subscribe button if you haven't done that already. And if you want these kind of updates for a lot of different assets which you have in your portfolio, you can look at the Patreon. The link is given in the description below, because there is a lot of assets which shows screaming opportunities, because there is a lot of that showing, okay, I'm in red now. You do have to look at this, then you have to look at the fundamentals and then the patterns. And if you see there is an opportunity, you can jump onto that. And for that, you can join the Patreon. The link is in the description. But remember, this is the end of the month. It's better to join early next month. So guys, I'll be meeting you on the next video. Bye for now.